So, Amazon, Alphabet, and Apple has just released their Q4 earnings results. In this video specifically, I wouldn't be breaking down individual earnings and how good or how bad it is. But from the market's reaction, it does seem like market participants aren't too happy about the different earnings and revenue miss. Across the board, they're at least down 3 to 5%. However, I would like to point out a very interesting and peculiar observation that I have across the three different big tech companies: Meta, Amazon, and Alphabet. So you know what they have in common? They all love the like button, because let's not forget, you're still viewing this on a Google platform. And what more can they wish for other than the like button and also subscribe on your way out? Because it improves user engagement metrics, and net, it's definitely good for the company. So don't forget to help gently tap that like button. But in all honesty, the three companies that I've mentioned have one thing in common, which is the advertising arm. So all three are advertising juggernauts. So I'd just like to point you to an article that was published some time back. So this was actually published on May 10th, 2021. That's around 1.5 years ago. And the title of the article states that duopoly still rules the global digital ad market, but Alibaba and Amazon are on the prowl. And if you were to just take a quick look in how the digital advertising space is being split among the different conglomerates, Google is definitely at first place. It's the king of advertising. We all know that. However, there's a clear worrying trend that is slowly trending downwards. From 2016, if you compare it to 2021, because this article is actually accurate as of 2021, it actually plummeted from 31.5% market share to 28.6%. On the other hand, the black bar, which is the Facebook graph itself, it actually started climbing up from 14.3% all the way to around 23.7% in 2021. And if you just look at the other two companies that we have interest in, Amazon is actually the silent killer. It started creeping up from 0.8% to around 5.8% in 2021. And the trend looks extremely exciting, especially for Amazon shareholders. And we'll explain a little bit more why later on when we look at Amazon's report. And Alibaba, on the other hand, it remained relatively flat from 6.2% to around 8.7%. So I think we can officially take out Alibaba and Tencent from the entire equation itself, because both of them will probably dominate the Chinese market. And I would probably presume that either three of the companies, whether is it Google, Facebook, or Amazon, I think they will have a very hard time trying to penetrate into the Chinese market. So let's just focus on the international market for now. By international, I mean US and the rest of the world. Broadly speaking, just by judging on the trend lines itself, it does seem like it paints a pretty grim picture for Alphabet, and we'll understand why later on. But that said, just to provide some context, Meta's advertising revenue has also been lackluster, at least for the last 3 to 6 quarters. So let's put everything together. So to dive right into Alphabet's earnings report, you can see that top-line revenue growth actually still experienced a modest growth rate, even though it's only a 1% year-on-year growth. So looking at it from a superficial lens, you might think that, hey, Google is probably outperforming Meta in this regard, in the advertising space at least, because if you just take a look, Meta's top-line revenue actually decreased by 4% year-on-year. So it does look like Google is posing a much stronger result. But if you really dig deeper into the different components and subcategories of Google's earnings itself, you can see that under the Google advertising category, it actually experienced a negative year-on-year growth rate. So if you just pull out the calculator to really understand the difference between the two, taking the current quarter, which is 59,042, and I divide it by 61,239, Google actually experienced around a 3.5 to 3.6% year-on-year decrease on their advert position. And comparatively, if you compare it to Meta in this case, Meta using Q4 results, 31,438 divided by 32,794, which is the family of apps, it's actually quite comparable. I think Meta in this case is down around 4%, 4.1, 4.2%. So if you were to actually compare the performances between the two advertising juggernauts, they actually paint an equally grim picture. It doesn't look good, especially when it's a negative year-on-year comparison. But let's not forget that both of them just came out from a marvelous quarter. The pandemic actually supercharged the entire growth for the entire advertising industry. So it's quite normal for them to see some sort of slowdown and in fact some sort of normalization. But at least from Google's perspective, they still managed to hold top-line growth because they still have that Google Cloud segment, which is still growing rather healthily. And more importantly, if you compare both companies, Google is coming from a bigger revenue base, around $61 billion. While you look at Facebook in this case, it's nearly half of their revenue base. So it's definitely easier to kind of push for growth when you're smaller. But in this case, Meta really isn't punching above their weights. That said, I think if to pay closer attention to their operating margins, Google is also painting an extremely bleak picture. Their operating margins from 2021 on a year-on-year comparison in the last quarter, it plummeted from 29% to 24%. And at least from Meta's perspective, in terms of their margins, they plummeted from 37% to 33% if you were to add back the one-time restructuring costs. More importantly, what I wanted to point out is actually Amazon's advertising business. So let's just forget about their retail business and their AWS segment. Let's just focus on the advertising services. The advertising services is actually up 19% year on year on a relatively huge advertising revenue base with $9.5 billion. Sure, if you just look at it from vanilla terms, Amazon out of the three has the smallest revenue base. But I think the market is slowly waking up to the potential of this advertising business that Amazon has in their arsenal. And I think long story short, at least in the upcoming decade or so, based on my own projections and my valuation model, I do see a potential where Amazon's advertising business becomes even bigger than Meta platforms by the end of this decade. Who knows? That's just my own speculation. But maybe just to drive home the point, e-commerce as a business is a pretty lackluster business. I think for most Amazon shareholders, you know that the entire retail segment, even the third-party segment, doesn't have huge amount of margins. It's maximum 5%. I mean, if you were to compare it across other retailers like Walmart, Costco, etc., their margins are razor thin. But I think in my entire thought process, I do place a huge emphasis in the advertising business because just take a look at what Alibaba has been doing. So before ByteDance actually took the world by a storm, Alibaba actually had the biggest advertising revenue by leaps and bounds. The second place was Tencent, and Tencent only made up around 30 to 35% of Alibaba's advertising revenue back in 2020 and 2021. But of course, via the introduction of ByteDance and how it was the next in thing in the entire world, based on the 2021 recorded and consensus figure, ByteDance actually took over Alibaba in terms of ad revenue in 2021. I'm not too sure how accurate this data is, but I mean, this report was generated by Goldman Sachs. So I would believe that there is some sort of legitimacy here and we can probably trust the figures provided. But what I wanted to point out is that investors probably shouldn't underestimate the synergies between the e-commerce business and also the advertising business. And in my own humble opinion, I think in the last 5 years, Amazon's advertising architecture is criminally underdeveloped. And now it does seem like they're trying to supercharge this business vertical. And I think last but not least, I just wanted to provide my opinion around the idea of a soft landing and how a slow economic environment or slow macro condition would or wouldn't affect these advertising businesses. So I see many arguments online, whether it's on Twitter or even on YouTube, where people essentially pull out how Alphabet or how Facebook has been performing in the last decade or so. And they just point out this very interesting time period between 2008 to 2010. And if you just follow my cursor here, this is Alphabet's earnings report, and these data is just pulled out from Capital IQ. So if you just track back to 2008 to 2010, you can see that there is still a strong level of growth despite what happened in 2008, which is the Great Financial Crisis. Alphabet had an earnings growth of around 8.5%. And many people essentially extrapolate this data saying that, look, even the Great Financial Crisis couldn't slow down their revenue growth. Why would you be afraid of the impending recession in 2023? I would just like to caution everyone of the nuances and the differences in circumstances when comparing 2008 versus comparing it today. Back then, digital advertising was still criminally underpenetrated, which is why they were essentially stealing market share from all advertising businesses, namely your cable TVs, etc. But in today's context, I think it's highly saturated. So this tailwind is slowly losing its steam. So don't be too confident that we would never see a negative year-on-year growth rates for companies like even Alphabet. So with that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!